Welcome to my morning report on Wednesday the 29th of July with me, Richard Perry, market analyst at Handset Markets. The European trading session has got off to a fairly settled start, nothing too spectacular. I think it's more to the fact that you've got commodity prices that have just started to settle down a little bit in the last 24 hours. You've seen the oil price just slightly tick higher. That's the first time it's really happened in several days, actually. Really, oil prices ticked higher, but again, even if you look on this basic chart, you're not really seeing too much of a trend change yet. A lot more has to be done in that. But also looking at the copper price, for example, that's bounced in the last 24 hours as well. So the fact that the market has been so concerned about the price of commodities falling, that means that sentiment has slightly improved on the back of that. So equity markets are slightly higher. FTSE especially outperforming because of its weighting, I think, in basic metal, basic resources and mining stocks as well. So it's fairly neutral. And I think the other neutral factor is on the coming in front of the FOMC tonight. You've got the dollar slightly stronger across the majors. Interestingly, apart from the Kiwi, which I'll talk about in a bit, but the dollar is slightly stronger going into this FOMC meeting, even though the market is not anticipating any real change from the FOMC. You might get a slight tweaking of the wording on the statement, but there's no press conference, there's no economic forecasts due to come out, or certainly there won't be any economic forecasts. So there's not really going to be too much that's going to change, and they're not going to go for a rate hike on a meeting that doesn't have those economic forecasts or the press conference. So that's why the market is going for September or December. Personally, I'm going for December still, but certainly not going to be today. There could be a slight, as I said, slight tweaking. Perhaps they could mention the commodity price declines in recent weeks having an impact on prices and price levels. That would be a dovish hint, or they could even start to think about putting in a line about the timing of a rate hike coming ever closer, or something like that maybe. But that would be a hawkish hint, but I don't think there's going to be anything too significant coming out today. There might be a little volatility around the FOMC tonight at 7 o'clock, but nothing too major, I don't think. So the markets are reasonably settled coming into this meeting, but you do have some other economic data out today to watch out for. You've got the US pending home sales at 3 o'clock. Let me just zoom in here so I can get rid of that big bar. So you got the US pending home sales at 3 o'clock. It was you can see in the last few months, pending home sales have actually been fairly positive, rising fairly consistently, plus 1.0 again this month. So it's expected to be fairly settled and nicely on an upward path, upward trajectory on the growth. And the housing data therefore would be sort of forecast to continue to improve. Then at 3:30 this afternoon, you've got the crude oil inventories, and that's expected to come in just slightly lower, actually, negative 1 million expected this week, but nothing too significant there for the change in the inventories levels. And then obviously you got the FOMC tonight at 7 o'clock. So that takes me on to my chart of the day, which is the Kiwi. Now, I did Aussie Kiwi cross yesterday because I saw a turnaround in the Kiwi, with the Kiwi strengthening against the Aussie, and I see this also has now broken, this strengthening of the Kiwi has now broken this big downtrend channel that we've been in for the last 3 months on the Kiwi dollar, sorry. And that's just beginning to show a technical turnaround. We've seen several technical indicators starting to improve. Not only have we broken through the downtrend channel, we've also seen the 21-day moving average broken. That's been a big basis of resistance, broken to the upside. You've seen the stochastics rising, and the stochastics are at a 3-month high. You've seen the MACD lines starting to rise. You've also seen the RSI at a 2-month high. So interesting that we're seeing this improvement, but there is more that needs to be done to suggest that this is a sustainable improvement. You certainly would like to see the RSI in the 50s, maybe even up towards 60, to suggest momentum is becoming bullish. You'd also want to see the breakthrough of the latest key reaction high, which is at 67.70. That was that key reaction high from July, the July high. That would need to be broken to suggest that there is the sequence of lower highs has been broken. So that is the key level that you need to see broken to the upside. Otherwise, it's just probably going to be ending up being a bit of a consolidation, really. In terms of the intraday chart, you've seen this improvement in the last in the last few days, really. You could argue on this Kiwi breaking through that downtrend channel that comes in there. You could argue also that the downtrend channel now becomes supportive on the correction, so watch out for that. It's already been seen as the 66.50 key reaction low overnight today, coming in basically around about that downtrend channel. So that's interesting, but it'll be interesting to see now if the higher lows continues on this Kiwi. You've just had a dip overnight, and it's come back into a sort of a band of support around that sort of old breakout interest on the intraday chart here. You see this band of support around the sort of 66.90 level, and just momentum indicators rolled over very quickly near term, but we'll see how that goes, because the MACD lines are just slightly corrective near term, but if they sort of maintain their position above neutral, that's still a positive, and if the RSI continues to sort of remain above that mid 40s level, that would also be a positive. So it's just a near term sort of near term dip lower into that support band, but it'll be interesting to see if this support holds and the Kiwi can continue to recover. But at the moment, the Kiwi is probably the best performing, well, it is the best performing major currency today. So with that in mind, I wish you good luck in your trading, and I'll speak to you later. Thank you.